Howdy everybody, Brian here from quantlabs.net. Today in this video I am going to talk about software parameters for this trading bot that you can download from my crypto bot trading analytics service. So I want to go through them, explain them what they are. I want to first say thanks to a lot of people that have made this possible. Some of them my own, a lot of them are from different people. They know who they are, thanks to them for the consideration. So if you go over to my blog, quantlabs.net/blog, look for an article called Crypto Trading Bot Software Parameter Considerations with Rate of Change on Entry. So first of all, if you're interested in this, I've got tutorial lessons here at this link. I've got the purchase link right here if you're into it. And if you want to know more, you can always get free trading books here at quantlabs.net or the DVD for algorithmic trading at quantlabs.net/DVD. Okay, so let's get into it. So if you've downloaded it and you're already a customer, thanks for that. Right now, I can only deliver signals via email. I have looked at Redis 6, NoSQL database in the future. As it stands right now, email's the only option, but I may go to a server that allows Redis 6. So the signals would be downloaded via connecting into a server database and be able to send out signals via that. So it'd be a lot easier than email. But for now, that's what I'm going to go with. From there, what we're looking at is obviously, if you're going to use this, you need to be on Binance. We've talked about that. You can get that more in the tutorial video. So there's no change there on the API tokens. Now, this is where it gets really detailed. Now, one factor that's really important is the more I put in there, the more complicated I get. So I'm trying to keep it simple. I'm using the exact same triggers for entries and exits on my end. I've decided to throw out what I used to do last night, realizing I've got 5 different now trading strategy styles, so it's getting even complicated for me to manage all of it. So I'll be using the exact same client as everybody else. There's a server end, so for my own trading, I'm doing the exact same thing as whoever uses this. So you'll be no different. So the first thing we need to consider is account risk management. So essentially, people want to know how many trades per day they want to allow overall, and these are at master level. So each style, which I'll get into, will have their own set of settings or parameters. So I'll explain those in a minute. But when I say master, that means that master setting can be applied to the all strategies, but there are individual settings that you can have to override that for each strategy style. And again, I'm trying to make this as simple as possible, so it's going to be a hard balancing act. But these are kind of universal, what a lot of people want. So the next one that people want is a daily drawdown allowance. Now, for me, and which makes more sense, is based upon all total position returns for the day. So here at the lower part, when I say day, I'm referring to a time that you can set where, let's say, if you set 12 a.m. as your starting point to measure a day or the hour for that day, and then allow 24 hours to lapse. When I say day, that's what I mean is that you have the ability to set the hourly time of when that day will start. And usually it will have to sync up with wherever the Binance servers are located. From what I'm seeing, they are located in the same time zone, strangely enough, in Iceland. Don't ask me why, but that's the time zone they appear to be in. So there's that. So I like to work with percent because everybody in their own location, wherever they are, if it's US, you got US dollar to worry about. If it's UK, you got the British pound. You have that. So I just thought, let's keep it simple, easy to recognize as well. Percent moves is what pretty well most people can understand, even when it goes down to the simpletons of people as well would understand a percent move. So it's the simplest way. So again, we have a daily drawdown based on percent of all positions set for that 24-hour time period, and it's based upon the rate. So each position is based upon the rate of change of the entry point, of the entry of that position when it entered into the market. And as it moves and exits, the difference between the entry and the exit is a daily return. Sorry, when you have a position put on an entry, and then on the exit, win or lose, making money or not, it's going to move based upon a return in percentage. So that rate of change, that in percent, is for that position. So each position will have its own rate of change. So then all total positions will result in those percent moves individually, and there's a total based on all positions, okay, based upon their entry points and exit points on the percent moved. Now, on top of that, people are wanting, which makes sense, and from a risk management point of view, this totally makes sense. So using that total percent move, you have a total percent loss per day. You have another way to do simple risk management is have a daily target of a daily return. So in some cases, people would love to have a percent return every day. And remember, with crypto, it's every day. It never closes. So it's 24/7, including holidays. So that's your daily percent return target that you would like for the day. So you can set for all positions, doesn't matter what strategy style you're working with. You can set kind of like a take profit for all positions in percent. So those are percent moves based off the entry. And I've also set the same thing for a stop all. So this is one of the advantages of allowing the bot to trade individually on a take profit percent and a stop loss, and that's due to the ability to have a individual virtual stop loss. So I will put in most likely I should add this as a parameter in there that when you put on the trade, do you want that trade in that trade to allow that take profit to be passed to the broker, and then that will override whatever you set, and you just apply the take profit. And I will think that that will also be applied to the exchange's stop loss for that trade. So I'll put in a parameter in there as well to say yes, only control it virtually, or control it maybe virtually, but also have a parameter in there to signal to the broker or to the exchange, Binance, that you want that stop loss to be set for that position. So I can do that as well. So we have number of losing trades per day. And again, that's the same here. Or sorry, so that's the number of losing trades in total per day. So if you trade, let's say 10 trades in a day, and let's say 7 of them are losing, we can set this parameter saying do not allow more than 7 losses for the day over that 24-hour period. So I've kind of explained what I mean here. That again, let's say you want to start your trading time for the day for 24 hours. Will start at 12 a.m., but it would be synced up with the server time for Binance, wherever that's located. And from what I'm seeing, I think, as I said, it's based out of the same time zone as Iceland. Percentage position of each trade. So you can equally allocate your position sizing. Now I can put in a percent or a amount, which is most likely going to be in USDT. So and for Binance, the minimum that you need to make a trade is 10 USDT or 10 Tether, or the equivalent of $10 US per trade. That's the minimum you have to set. Okay, so in here I've got the mention of each trading strategy style, and in here I've got each one will have its own individual settings that will override these settings as well. So let's talk about them. Now, one of the controls here is you're going to have control on the exit. You'll get the entry signal through your email, but from there on how you want that entry to take place is determined based upon how you want to set these trading styles. I will put a setting in there to allow you to turn on that strategy style on or off. So if you like certain strategy styles, you can turn them on or off at will. So there's 5 of them that I've tested and kind of got working. These first 2 I've tested, and they can work when you have very strong momentum in the market. Okay, so in here, the 5 styles we're dealing with right now, and I can add more, and these are good for not all times, so you may want to turn off certain strategy styles based upon market conditions. So what I'm going to do as an add-on on the monthly service, I am going to have available a kind of equivalent of a newsletter that I'll put out every day on what I'm seeing in the markets and how I'm going to allocate these settings for my own client bot, because as I said, I'm using the same client bot that people have access to. Okay, so I'll be tailoring my bot based upon the market conditions that I see, and then have that same equivalent service in a format of a newsletter or a video, so that people can stay up to date, because we have to acknowledge there's no foolproof method to always have one bot universally with all these different settings to universally for all market conditions to trade and trade profitably. So we have to have different styles that I've seen and tested that work and will work under certain market conditions, and other strategy styles will not work under certain other market scenarios. So let me explain. So we have a futures. So remember, in Binance you have 2 markets when you watch the tutorial page, and there's a couple of videos on this here about the difference between the spot and the future market. So you will segregate out, is this style going to trade in the spot market, or is it only going to trade in the futures market? And here, the futures only momentum is just that. It's only going to trade futures based upon momentum conditions when there's a strong trend for the futures. I've also tested that, and it's got its own trigger points to make an entry happen. But I've modified that as a second strategy style that is momentum based, and it's using a very simple an EMA exponential moving average cross. So when the price and those EMA time periods over a minute time frame hit, it will send out a trading signal. On top of that, this is where it gets really bizarre. I've tested this as one of my oldest market strategy styles, and I'm going to look at a bunch of other ones as well, because I've got many, and I've got 5 here listed. But one that seemed to work, and I've tested, is the Ethereum spot market, which will work in a down market. It will not work in a upward moving market, and I only add this because it can be a defensive play when everything's moving down. Because what I found is with the 2 spot markets, the major ones, Ethereum and Bitcoin, there's other ones as well, like BNB and all the others. And Ethereum will fall under the alternative market. But if you're just trading in Ethereum, because the minimum needed for that is very low, so it's very low risk. And this will trade among, I can't remember the amount of coins. It's quite a lot, a couple of hundred. And there are, even if you got the world on fire market conditions, there are some coins and pairs that will trade in Ethereum still and perform even if you have severe down markets. So this one will not trade a lot, but it can work. I'm not saying it will. And as I said, if you have in the Ethereum spot market and an up market, you will lose money. So you have to be very careful using this, but in extreme conditions that I found, this can profit. But again, further testing needs to take place on that. Now these two I introduced in detail in a YouTube video yesterday that I developed in the last few days. Today is Friday, May 1st, 2020. But this is going to change, and this is going to be more up to date as things evolve. But I have put out two videos in here. This video here called 2 New Crypto Trading Bot Designs for BTC and USDT. This is what I'm referring to, these bots right here, or trading strategies. Let me get to it. So what these entail is, these are oscillators. Now, when I say oscillator, there's a difference between a bot that trades 100% in momentum, but it still needs very, very strict market conditions in order to put on trades. The Bitcoin futures market oscillator, from what I'm testing, will trade anything and will do really well. Like 2 days ago, where Bitcoin moved up almost $2,000. So that strategy will do really well. It will try to factor in break even on the commission fee for both the entry and exit. Remember that the commission fee with Binance will work when you factor in the both the sell or the buy and the sell will be charged 0.1% on the overall trading size. So factor that in, and once it breaks even and there's profit, it will enter and exit based upon those conditions. So this can be used when Bitcoin's really strong. And I could add other ones, but when you watch that video here, I do show in that video how trading volume is very important. And when you look at, number one, Bitcoin is huge. And then when you move into Ethereum and other coins after that, the volumes drop off immensely. So those coins may do well under rare conditions, but because Bitcoin's so big, it may work when Bitcoin oscillates. So there will be that. I've also and have tested out a similar bot. It's an oscillator, but for the spot market in the USDT market, and there's about 120 pairs to choose from. So again, when the markets go down, so this can be used as a defensive bot, but this one as an oscillator will work when the markets are not performing as well. You still are trading in USDT. But this one is got to be very careful with. I'm still testing it. And as I said, what I'm going to be doing is I'm going to be doing a newsletter style service to keep people up to date on what I'm doing to adjust these bot conditions and set the parameters set. So when you need to reset the bot for certain market conditions, you just terminate the bot, modify this, which will be in the INI file format, which I show in the tutorial, and then you just relaunch the bot. So it's simple as that, because everything else will work out of the gate because you've got your email working, you'll have your Binance API tokens set up. So once you want to readjust your bot settings, you can do that. What I'm hoping to say is you may be able to just change the INI file on the fly, and then the bot, while it's running, will adjust to those parameters as it runs. The only thing that will limit that is based upon your operating system. I do think it will be fine on a Mac. Should be fine if I distribute this on a Linux, which I really don't want to do because I've already talked about that. And Windows is really the factor, because what I have seen is when you have a program running, you change the file it depends on, it may still use the old settings, so you may have to terminate the bot and relaunch it again. But we'll know that as we get closer to that testing period. Now, as I said, we have five bots here, or 5 styles. More to come. Some may be taken away because of risk or whatnot. But you can see here, the idea is you will have a very detailed level control on how these bots trade. But I'll address some concerns in a minute once I go through the individual settings for each of these strategies. So each of these strategies will have their own set. These settings I'm going to talk about is going to be have its own settings, okay, and that will override what you set up here in the master settings here. Okay, so these ones will override the master. Okay, those include for that particular style of strategy, will you allow multiple positions for a pair? This is really important because I will tell you, this time last year, people may think that I'm crazy to say this, but you can get 1% for a particular trading pair and a certain strategy style. If you limit one position per pair until that position's closed, you're limiting your bot when the markets go crazy moving up. What this parameter will allow you to do is to allow multiple positions to be open based upon the entries, and allow multiple entries to take place for that particular pair when the markets allow, meaning the markets are in an up market. If you're not a risky kind of person, you can have a setting here that will mean I only want one position to be open at a time per pair. So that will limit you on the risk level when the market's down, okay? But if you want to make a lot in magnitudes, like I'll give you an example. If I have a bot where it's only trading, let's say, Litecoin against Ethereum or BNB against Ethereum, and you look at 2019, the performance of both those coins between December and April, you'll notice that those coins went nuts in terms of return. The reason you can get like crazy daily returns is because you allow certain coins to be traded, certain positions to be open per pair. So what I mean there is, let's say you have, lately Chainlink against USDT is going crazy, and you're doubling your money in a month. If you want to excessively enhance your profits, what you can do is you can allow multiple positions to be open for that pair. Okay, so instead of having one position open for that pair and only that, you will get a slight return. But if you want multiple in a high magnitude, you allow multiple positions for a pair to be open. So that means if you have the market condition of a particular pair that's moving a lot, what will happen is you will get a return. Let's say one position would give you 1%. Theoretically, if you have 10 positions that could give you that 1%, now you've multiplied the return factor by 10. And as I said, I've had days where you could get 300% daily return. And that's because I'm allowing multiple positions to be traded per pair when the market condition allows. So as I said, you have to tightly control these settings when you're sleeping or not, okay? Because if I go further, it's going to further complicate this bot, and I got to draw the line somewhere. Okay, and that's where I draw the line. It's like you can go crazy and you can set those settings, but obviously if you allow multiple positions on a pair that's losing, you will magnify your losses as well. So you got to be very aware when the markets allow. And I'm going to talk about a way to measure that in a minute. Okay, so the strategy, individual strategy type, any of these 5 and more to come, can have a trade, individual take profit for that position. So maybe each position you don't want it to go past 1% and just take profit. If you have very tight market conditions, you may lower it to 0.5 or even 0.25%. That has been not uncommon lately, but you have to factor in if it goes less than 20%, you're not covering your commission fee, because as I said, you're going to have on the entry a 0.1% to factor in for the commission fee on the Binance entry commission fee, and on the exit you're going to have another 0.1% as well to consider. So that's going to give you a 20% is the break even on average per position to get some kind of return if it goes profitable. So you have to factor in roughly 20% to get the return. And again, you can set that and lower it if you want. That's up to you. And again, you'll have, as I said, an individual stop loss as well. And note that I say this based upon the entry price. So let's say Ethereum is $100, and you set the return to be, and you put a full position, $100 risk, and you put a 1%. Either on the stop loss or take profit, it will get out of the trade once it hits either the 1%, which is 100 plus the 1%, will get out there, or if it's on the stop loss, it will get out at 100 minus 1%, which is 99, and get out there on the downside for the stop loss. Now, here's an interesting one as well. I've been testing this target called AOP. I talk about in this video here, and this one as well. This other video called Leading versus Lagging Technical and Analytical Indicators. That one has kind of worked. These take profit and take profit stop loss are based upon basically rate of change percent, ROCP. AOP is another one that can be used as a target. The problem is it's a lot of experimenting. I could put that as an option and just allow you to worry about only these two, the individual take profit and individual stop loss. But this is an interesting one as well. Now, here's a couple of very, very important ones. So again, remember all of these that you got here are per strategy, so I'll have that broken out in the INI file for a setting. So hopefully it's not complicated as it is. I'm trying to simplify it, but I can't make it more complicated than this, because most people will get either confused or whatever. But this is as best as I can make it. So this, as I mentioned, is a very, very important metric to measure market conditions. So you've probably heard me mention this a lot, these what I call the big four. So these are your Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Usually by volume, these are your 4 largest. You could add XRP in there, or there's been Stellar in there as well. Those coins are very volatile, and when they move, they really skew this metric badly. And if it goes negative, even though, like, let's say one of those small coins like XRP or Stellar or something else that I add in goes like severely negative, it throws off this metric of these big four, even though they could be all positive and throw off the skewness and skews it badly. So I exclude XRP and anything else as well. For the last 2 years, these four have been pretty good metric to measure this overall volume weighted average price or volume weighted average percent as a metric on when to trade and when not to trade. It's kind of like you won't get this anywhere else. So it's like a metric for the whole asset class of crypto. Like you don't have anything like this in Forex. You may, but this works. And I'll tell you, when it comes to Bitcoin and all these other coins, there's maybe, let's say in the futures market, out of 23, and when Bitcoin's moving up, usually roughly 20, at least 20 of those 23, 24 coins will move in the same direction as Bitcoin. And these four move all in the same direction. Some will outperform the other, but Bitcoin's the granddaddy of them all. So if they all move together, there's a benefit there, and the benefit is that it gives you a pretty reasonable metric of this volume weighted average percent. So let's talk about the advantage with that is big because it's based upon the volume size of these four. So they, like Bitcoin, will obviously have the biggest knock-on effect on this metric overall because the volume's so big, but all the other ones will have a factor as well. And this measures them pretty close to real time. So what this means is these big four, when they're negative, or when this metric is negative, all four are down. You don't really want to trade. You got a situation in, you don't want to trade those at all. But you may be able to trade this one as a defensive to get some trading opportunity, and you're willing to take some losses for it. This one's showing the same kind of performance as well as a defensive when this metric goes negative. So keep that in mind that these two may be, this one 75% chance that it can do okay and profit when the market goes down. So that's when this metric goes negative. Okay, so that is important to factor in. But when it does go up and it's positive, it's a really good metric to show the overall strength of how fast those four are moving. Those four coins are moving. So if you see and I've seen as high as this 6, 7, everything's moving up, and it's moving up fast, and it's moving up very strongly. So all of these, probably with the exception of this one, the Ethereum, will do well. Especially this one will do really, really, really good. When you hit that metric of 6, 7, 5 maybe as well. But most of the time, 75% of the time for the last 2-3 months, this metric that I'm talking about never moves more than negative 1.5 to 1.5. From negative 1.5 to positive 1.5. Most of the time it's in that range, and that's where it goes kind of range bound. And that's good to know how to tailor these strategy styles based upon these settings. So you can adjust the settings based upon this metric, because it's this metric that will help you determine what you should set in all of these settings for your bot. So knowing that if it's between negative 1.5 or 1.5, you can, like I said, turn on and off which bot you want to, or which trading style strategy you want to activate, and adjust the individual setting as well for the take profit and stop loss. And that will be on purpose a manual thing, because as I said, I can't automate this, and even if I could, chances are it's still not gonna be foolproof. Okay, so understand that. Okay, so that's the universal metric that you will be able to depend on to tell you how the markets are moving overall using this volume weighted average percent price based upon these big four, Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. It's been pretty standard for the last 2 years. Okay, now there's this one as well. RSI, I have played around all the time. This thing works wonders for me. Okay, so on an individual level, there's strategy style. You can set, okay, I want my entry exit to be set by the RSI. Okay, so when you get your signal, you will get the RSI as well. So usually I can send out the signal once it hits 50, because usually when it hits 50, or I'll say 54, 55, you have an opportunity to trade as an entry, potentially. But again, that's dependent upon this guy as well. So there's that balancing act. But if you set, okay, you get a signal and it's 55, maybe you only want to set it to 60 or 70 when you know that the volume's there pushing up the price where the RSI is, chances are it's moving up. And I purposely put this setting in there as a way to help gauge if you want to make an entry or not, even though you can get the signal. So let's say I send out a signal to you at 55, but yet your volume weighted average percent is at 1.5. You can decide in that bot client piece of software saying, no, I don't want to make a trade until I see the RSI 60 or 65, and the volume weight is maybe at 2 or 3. So you can configure that. So this is, again, that balancing act, and I've just decided it's just better to hand over that control to customers, because I can feed all the information I want to you to know when to trade and when not to trade. But the problem is, you could say, okay, my entry did hit 60. I want to make that entry, and you do, and you allow it to happen when the volume weighted average is at, let's say, 2. Okay, so you do that, and then all of a sudden you get a whipsaw. Okay, so if you get a whipsaw that's a negative, what will happen is you get all angry at me saying that the bot won't perform. But I want to give you the control to say, okay, it did hit this, the RSI did hit 60, it did hit the VWAP, or the volume weighted average percent, and then you choose if you want to take that trade or not. One of the other things I could do is provide a list every half hour of pairs that the whole thing's seeing that are too volatile. Okay, so that list I can provide and send out, as well as send out the volume weighted average percent. But what that list of pairs will do is to tell you, saying these are the most volatile pairs right now. Do you want to trade them or not? Based upon the market conditions, saying that you could have a chance of a whipsaw going against you if you took that entry on that particular pair. So I can track all the pairs out there based upon if they're very volatile. And I can do that as part of the conditions to tell you within the bot if you want to take a trade or not. If there's a list of pairs, coin pairs that are too volatile, and you can then decide if you want to take those trades or not. So I can provide that. On top of is another metric to sort of help build for you, reduce the risk of bad trades if they go negative or have a whipsaw in the last 2-3 hours. Because that's what that's basically telling you is that that particular pair is way too choppy. You may not want to trade it, but you may have another pair that has a solid a solid stable price where it's not having any of these whipsaws. I can set those parameters as well in a future date. So if you're interested in that, let me know by a comment or an email or whatever. Okay. So the exclusions. Okay. So somebody asked and said outright they don't want to pair certain pairs. That's fine. I can set that within a comma, like a comma separated file that will be sent out with the bot, and then the bot will check that list to see if you want to trade a particular pair or not for whatever reason. Another thing I can probably put in there with this pair is how much minimum volume do you want to allow that pair to be traded or not. Okay, so it has to hit a certain level of volume before you can consider to trade or not at the level of the pair. So I can provide that as well and have the bot check that as well. And I can set all that up in a separate CSV file or an Excel file, whichever is better. One of the other things I'm looking at is when the entry signal comes to you into this bot, I'm going to also provide a Excel spreadsheet of all the positions. So once a position comes in, you will have access to a Excel spreadsheet format that you can go in and individually move. So if there's pairs that you're seeing you don't want the bot to trade, you can go in and manually close them in your Binance account and not have the bot track it and close the position, so you can manually override that through your Binance account. So I will have that available, and you can remove that pair out of the list if there's an entry you don't like, and then you can remove it and manually close the position in your Binance account. All right, so these are the overall settings. I know that this can probably be kind of confusing, but these are all the conditions that I can think of when it comes to simple, effective trading bot controls. Because all the other metrics that I've looked at, I've done this analysis on some of the indicators that this person provided, do and don't work. And the ones that I'm talking about in this video, RSI, rate of change, they work amazingly. There's other ones that I'm testing to see if they work or not. But at the end of the day, this is what this bot's about, is to give you a target level when a position is put on. You get that signal so that you can control what you want the percent move to be to get out of the position. Or if it starts losing, you have that control on the stop loss side. The AOP may or may not work. I can't say. And the other one that you can use as well in combination with the ROC as an exit is the RSI. I could provide an ATR target as well, or maybe suggest it as part of the signal, but that would be the same as your parameter you set for your profit, take profit percent and stop loss percent, which are set as targets when the position's put on. So there's that. RSI is another way to control the entry and exit, and as well overall, if you want to trade or not, is using this volume weighted average percent as well. So you do have pretty damn good control with this. And that's how I've been trading this for the last year, 2 years, using all of these parameters that most people have provided and I've also used that work really well. A lot of the indicators that you may be used to, as I said, does lag. And as I said, I mentioned that in this video here, leading versus lagging technical analytics indicator. I don't cover them all in that video, but that's just some of them. But the ones I'm talking about usually work at a universal level. So that's what we have. Okay, so we'll leave it at that. I'm hoping this will satisfy people for now. And let me know what you think. I'm building this as of today. I'm putting it all into one bot, these 5 different styles or strategies in a one client bot. I'll make them available as part of my new software that you'll download. The entries will be emailed out to you in more detail. As I said, there's going to be a add-on newsletter, video, and one thing I should mention is that people are not using is the private chat server. That's why I built this for this exact scenario, for that people can talk to each other on this private chat server, and it's private because, from my experience, using Telegram, Facebook, all of that, well, we know any commercial, private, social media platform, messenger is useless because they control that. They control what can be said, which is useless. Plus, they track it, which I'm not comfortable with. And especially from the tracking point of view, I think it's nobody's business to know what you're trading, how you're trading, and your trading idea, and you keep it private. And especially keep everybody out of it, and that's including government as well. Because when it comes to third party, any third party, they do have the ability to track it or get a court order to get it. Here with this private chat server, it can delete conversations and not track and record those conversations, and that is done on purpose. Okay, so people can trade and talk anonymously among themselves. It can be set up for one-on-one. It can be set up for different chat rooms as well. So I hope people leverage that as part of the service, and among also technical as well for building bots as well. That's why I have that chat server. That's pretty well it. Okay, so hopefully this will help out. Remember, this is the first version. This is the first video. It will change. It will evolve. It will get better. It may get worse for some people. But this is the best I can make it without ticking certain people off and other people on. So we'll leave it at that. You got an opinion, let me know. But this will be hopefully set in stone. I will update this video as well as I proceed, and update instructions on how to get this thing once we get to that level as well. All right, so thanks for watching. Thanks for the input. I highly value it, and we shall hopefully prosper from this, and so should you as well. Thanks for watching, and you have a good day. Over and out. Later.